Welcome back to the channel, everyone. Today I want to talk about how the Trump stocks are going to impact the AMC squeeze. You may have seen DWAC, PHUN, BENE, and a few others absolutely skyrocket today. But what does this mean for AMC? Stay tuned and let's make some money. But before I dive into the video, if you haven't already, be sure to sign up to Moomoo to get some free stocks. You can not only get a free stock worth up to $350, but you can also get a second free stock with a guaranteed value of $57 on top of that. And at the end of the day, who doesn't like free money? Linked in the description below. Moomoo is great because they have free real-time level 2 market data. They also have advanced charting tools, and most importantly for me, they have 24/7 real-time financial news so that you don't miss any of the big headlines. And now I want to dive straight in with the key information. So, you may have seen DWAC run from around $10 yesterday morning all the way up to around $170 this morning today. You may have also seen PHUN run all the way from $1 or $2 to around $24 in a matter of a few hours, mostly during the pre-market. Again, BENE ran from around $10 to around $18 before swiftly falling back to basically $10 or $11. And now basically I want to cover this from a few different angles on how exactly it's going to impact the AMC squeeze. Firstly, I would give you some advice of saying do not sell AMC to chase the Trump stock. It may seem like a good idea for now, but chasing a squeeze is never a good idea. Sit tight and hold. So that doesn't necessarily just go for chasing a squeeze, but it goes for chasing any stock whatsoever. For example, if you bought DWAC this morning, as soon as the stock opened, the stock obviously halted in the first minute, and then after it reopened, it fell very, very quickly all the way back down, and you'd be down massively on your investment. You might have then paper handed DWAC around here, buying back into your AMC, but you would have only been able to buy probably around half the shares that you sold, therefore losing out massively on your AMC position. More importantly is these first 4 words. Do not sell AMC. By selling your position in AMC, you're effectively giving the market makers and the short hedge funds exactly what they want, which is the sale of real shares into their hands so they can use those real shares to cover their shorts. The reason why short hedge funds have been having so much trouble recently is because we hold the majority of the float. We hold all of the real shares, and I mean we hold pretty much all of the fake synthetic shares as well. The problems that these market makers and actual trading platforms are having is they cannot locate shares of AMC or GameStop. So by selling your position in AMC just to chase any stock, whether it's the Trump stocks or anything else, you're just giving them exactly what they want, which is real shares into their buy orders. Now I also wanted to talk about it from a different angle as well. Did you see DWAC and PHUN? This is what will happen with AMC and GameStop without the dark pool. You can see that DWAC ran from $10 all the way up to $170. If you didn't know, this stock wasn't very heavily shorted. Therefore, this squeeze or this run upwards isn't caused by a short squeeze. There was also no options trading on this stock either, so it's not a gamma squeeze that went down here either because there's no market makers that were hedging for the options. So therefore, this is purely FOMO. The stock ran from $10 to $170 in a matter of a day and the pre-market and the aftermarket with no short squeeze and no gamma squeeze, just FOMO. This stock ran by 17 times or 1700% in a matter of a day. 17 times 40, as in $40 give or take for AMC, is around $600–700 per share without factoring in the short squeeze and without factoring in a gamma squeeze, just purely from a FOMO perspective. When you then factor in not only the float being shorted, but many times the float over being shorted by all those synthetic shares, and you factor in all of those shorts covering and pushing the price up, you then also factor in gamma and gamma squeeze, and you also factor in FOMO on top of that, you can see how AMC and GameStop are certainly going to hit in the thousands of dollars, if not tens of thousands or hundreds of thousands, when the squeeze does commence. I think Antonio Martinez puts it perfectly. DWAC is not the mother of all short squeezes. It's not a shorted stock. People are buying the stock and that's why it's going up. With AMC and GameStop, these stocks are shorted heavily and manipulated heavily. Once the shorts cover and FOMO kicks in, these two are going to be more violent than DWAC. Patience. Now I wanted to show you DWAC on a minute by minute basis to show you actually just how violent AMC could get during the squeeze. As you can see here, in the last few minutes of the pre-market, it went from around $100 all the way to around $120 before opening, shooting up to around $130, $131 before halting for around 30 minutes, and then opening up around $170, $169. Now imagine all of that with an extra 0 or 2 zeros or 3 zeros on the end, and you can imagine just how violent the AMC squeeze is going to be. Overall, I don't think there's anything wrong with buying a Trump stock like DWAC or PHUN, providing you can get in early enough and make a big profit, because you can then take that big profit and buy more shares of AMC. At the end of the day, that's only going to help the squeeze because it will mean that we're buying up more of the flow. But if you're selling your AMC to go and buy DWAC with the hope of making a profit that you could then put back into AMC, I don't really think it's that great because you're having to sell the AMC in the first place, which is just giving those shares to the short hedge funds. Yes, I guess you could make a big profit and then put it all back into AMC very quickly, but it'd be better if you're using money that's not invested into AMC at the moment to make that profit and then putting that profit back into AMC. Now I also wanted to talk about the confirmed NFTs that are coming to GameStop and that will soon also be coming to AMC. There's now a new NFT subdomain for GameStop, support.nft.gamestop.com. He says, "Hey everyone, I've been tracking subdomains on GameStop for a while now because they can reveal a lot about what the company is working on. My previous post here was the last NFT related subdomain ipfs.nft.gamestop.com that GameStop released until today. This is verifiable proof that GameStop are working on an NFT to distribute to all shareholders, 1 FT for every 1 share. This will therefore expose just how many shares are being held of GameStop, whether it's obviously more than the actual float, and whether there are indeed naked shorts in existence. I imagine AMC is also working on something like this behind the scenes, and that's why Adam Aaron announced that he will soon become, or AMC will soon become, an issuer of cryptocurrency as well." Another ape said, "I am so proud of us. We are on fire. If you now Google Ken Griffin Lies, the first result is kengriffinlies.com, followed by some Reddit results and some other Ken Griffin lying related results." The Google search SEO is not overran anymore by that Ken Griffin interview that he gave with Bloomberg that basically distracted any kind of Google searches from true Ken Griffin lies. This is absolutely brilliant that we've managed to get Ken Griffin lying under oath back onto the top of the Google search results. Now I also wanted to show you this video of the Better Market CEO explaining and breaking down the case between Citadel and the SEC, which will be heard on the 25th of October.
Hi, I'm Dennis Kelleher, President, Co-founder, and CEO of Better Markets. Better Markets is a nonprofit advocacy organization in Washington, D.C. That fights for Main Street families, workers, consumers, and investors. And that's why I'm talking to you today in your capacity as investors. In the news is a case called Citadel versus the SEC. That's a case pending before the appeal court in Washington, D.C., and there's going to be an oral argument Monday, October 25th at 9:30 a.m. It's actually 3 cases slated for 9:30 a.m. One of them is this case, and the court will be live streaming the audio of that argument if you want to listen. Now, why would you want to listen? Well, because the investors exchange called IEX has created what's called an order type that actually is beneficial to retail investors and the buy side. It actually helps them get the best price, whether they're buying or selling. Now, the high frequency trading firms like Citadel don't like that because they operate in dark, largely unregulated markets where they're trying to maximize their profits, not maximize the best price for buyers and sellers. So IEX submitted this order type to the SEC and it became effective, but Citadel then sued the SEC so that the SEC will stop IEX from putting in place an order type that is to the benefit of retail investors and the buy side, including mutual funds and pension funds and others. And so that's what this suit is about, is whether or not IEX will be able to put an order type in place that helps investors, or whether or not Citadel and the high frequency trading firms will be able to force the SEC to stop them from doing that. Now, Better Markets as it usually does, is on the side of the investors. And we filed a brief supporting the SEC in this case. And so we hope that the SEC's position will be upheld. We hope the court rejects Citadel's attempt to quash, squash, and stomp on the IEX order trade, which is to the advantage of the buy side. So that argument's on Monday, October 25th, starting around 9:30. You can listen to the audio live stream. We hope they rule the right way. We hope they agree with our legal brief, and we hope they let IEX use this order form, and by the way, a lot more, so that the buy side and the interest of investors will once again be first, not the profits of the firms like Citadel that operate in dark, unregulated markets. Thanks for listening. It's Dennis Kelleher at Better Markets. Go to our website, www.bettermarkets.com, for lots more information.
I think that's a brilliant explanation from the Better Markets CEO, and I'm very glad that he's put in some words with the SEC to show that we, the retail investors, do want to keep the delimit orders. If you want to watch the live stream, I think it's going to be the SEC that are live streaming it at 9:30 a.m. Now, I also wanted to give you some wider market updates, and today Jerome Powell said that the Fed is on track to taper and inflation will come down. So basically, Jerome Powell is saying that the US Fed is going to stop propping up the US economy. The Federal Reserve Chair, Jerome Powell, sounded a note of heightened concern over persistently high inflation as he made clear that the central bank will be tapering its bond purchases shortly, but remain patient on raising interest rates. The risks are clear now to longer and more persistent bottlenecks and thus to higher inflation. I would say our policy is well positioned to manage a range of plausible outcomes, he said. I do think it's time to taper, and I don't think it's time to raise rates. Powell and his colleagues on the policy setting Federal Open Market Committee are expected to announce at their November 2nd to 3rd policy meeting that they will begin winding down the bond buying program put in place last year in the early days of the pandemic. Currently, the Fed is acquiring $120 billion of treasuries and mortgage-backed securities each month, and the coming reduction in the pace of purchases will mark the central bank's first step towards the exit from the monetary support measures rolled out in 2020 to shield the economy from the effects of the pandemic. This is a very difficult decision for Jerome Powell and the Fed to make. I don't necessarily think it's the right idea right now to stop propping up the economy, because I think it's definitely going to cause quite a large correction. But at the same time, they don't really have much choice because inflation is very much getting out of hand and will continue to go up if they don't put measures in place. Guys, be sure to let me know down in the comments below what impact you think the Trump stocks are going to have on the AMC squeeze. And if you haven't already, be sure to sign up to Moomoo using the link down below in the description to get some free stocks, because at the end of the day, everybody likes free money. And as always, guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.